There's no question that the greatest investment tool that exists today is the Roth IRA, especially if you're a younger investor. And the reason that the Roth IRA is the greatest investment tool right now is for one and one reason only, and that reason is tax-free money. But tax-free money is awesome, but not if you're putting your money in the wrong thing. And believe it or not, there are 4 investments that you should never, and I mean never, put inside the Roth IRA. We're gonna find out what these 4 investments are. I'm also gonna share with you what is the biggest Roth IRA imposter that you want to avoid at all costs. So today we're gonna find out what these 4 investments that you need to avoid and this Roth IRA imposter right now. What's going on, y'all? Welcome to Wealth Hacker TV, the channel dedicated to teaching you new ways to grow wealth that is not taught to you by your parents or in schools. I am your host, Jeff Rose, and we are talking about the Roth IRA, otherwise known as tax-free money. But still, I see a lot of people that have misconceptions about the Roth IRA. They think the Roth IRA is an investment. They think that if you open up a Roth IRA, that it's going to pay you dividends, it's going to pay you interest. The Roth IRA is not an investment. If you're not quite sure how the Roth IRA works, then you need to check out another video of mine where I talk about how to become a Roth IRA millionaire. So once you understand the fundamentals and how the Roth IRA works, now it's time to decide, what am I going to place inside it? You can buy stocks, you can buy mutual funds, you can buy ETFs, you can buy a lot of different things. But just because you can buy a lot of different things and place them inside a Roth IRA doesn't mean that you should. And that's what we're talking about today. So what are these 4 investments that you should never, as I said before, never put inside the Roth IRA? Well, let's find out what those are right now. All right, the first thing that you should never put inside a Roth IRA is a penny stock. And for those that don't know what a penny stock is, typically it's a stock that's trading below a certain price, typically under $5 per share, and usually is not available on the major stock exchange like the New York Stock Exchange or the NASDAQ. You can usually find it being traded over the counter on the pink sheets and other places like that. So that is what a penny stock is. So the common attraction with penny stocks is that people believe that they can take a small amount of money and buy a lot of shares. So if you're buying 1,000 shares of a 20-cent stock and all of a sudden that stock goes from 20 cents to $3 or maybe $10, all of a sudden, bam, I just made a lot of money overnight. That's not gonna happen. It's not gonna happen. Now, I'm not really sure what the stats say on what the chances of you losing money on a penny stock, but I'm gonna safely bet that it is 95% or higher that you're going to lose money. Now, the reason why you would never want to buy penny stocks in a Roth IRA is because you can only put in a certain amount each year. Right now, the most that you can put in is $6,500. So if you put in $6,500 and you put all of that money, all of your contribution into a penny stock, and that penny stock goes kaput, well, you just lost your entire Roth IRA contribution for that year, and the IRS doesn't allow for do-overs. So you can't redeposit that $6,500 that you lost in the penny stock. It doesn't work that way. It takes a long time to be able to save enough to invest inside the Roth IRA, so you don't want to put into something that's going to potentially lose everything that you have scrapped and saved for. And if you don't think that you can lose all of your money in a penny stock, then you can watch another video where I briefly mentioned how I lost $5,000. That's right, $5,000 in one penny stock. So yes, it can happen. All right, the second investment you should never place inside a Roth IRA are short-term bonds. So bonds typically are thought of as being a safe investment, which they are, relatively speaking, if you're going to compare that to stocks or cryptocurrency. But what I don't understand is why you'd want to place your retirement investments, your potential tax-free money inside the Roth, into a short-term bond. Roths are meant for the long term. You want to put that money in, have it grow so that you have a huge tax-free amount waiting for you later on. So if you're going to put that into a short-term bond that's paying you very next to nothing on interest, it's just not worth it. There are different types of short-term bonds that you can buy and place inside your Roth IRA. There are individual bonds. You can buy mutual funds that specialize in short-term bonds, or you can buy ETFs that specialize also in short-term bonds. One of those short-term bond ETFs is the Vanguard Corporate Short-Term Fund. Right now, the yield on that ETF is currently paying 2.98%, so just under 3% interest. And I don't understand why you'd want to make 3%, especially when you have something that's going to capitalize on compounding interest so that you have a huge tax-free chunk of money waiting for you. Well, it's not going to be huge if you're only making 3%. Another variation of this that I've seen is with these robo-advisors and investment apps, and they're marketing the savings account alternatives. And if you look at the marketing material, it's saying that, oh, their accounts are paying 20 times more the national savings account rate, which is true. But you have to realize we're not comparing apples to apples. We're looking at basically our short-term bonds, treasury bills being compared to savings account. But right now, the Betterment Super Saver account is paying 2.18%, which that is great if you're looking at that as a savings account alternative. But if you're opening up a Roth IRA and you're putting that into a Betterment Super Saver account that's only paying you 2.18%, we're not taking advantage of compound interest. So just to show you the effect of putting your money into a Super Saver account, which is really just short-term bonds, over the long term, if you are putting $100 a month over 30 years and you're making 6% interest, at the end of that 30-year period, you'll have over $100,451. Now let's say instead of making 6% on your money, you decide to put it in a Super Saver account that's only paying you 2.18% interest. Over that same time frame of putting $100 a month in over 30 years, the difference is you're only going to have $50,756. So basically you just gave up $49,695 because you put it into a Super Saver account. And this just emphasizes why you don't want to have short-term bonds inside your Roth IRA. All right, the third thing you should never put inside the Roth IRA is an annuity. I don't care what type of annuity it is. It could be a fixed annuity. It could be a variable annuity. It could be a fixed index annuity. If you don't really understand how annuities work, the one thing you need to know first and foremost is that if you put money inside an annuity, it already offers you tax deferral. That's how these investment products are structured. So you're already getting tax deferral. You don't have to pay tax until you pull the money out. So why would you put money into an investment that already offers you tax deferral and then you take that and put it inside the Roth IRA? Like, you don't get double tax freedom. Like, that's not how that works. But yet I see so many different advisors that are selling annuities inside a Roth IRA, and it doesn't make sense. And this is why I hate when I see annuities inside a Roth IRA, because typically the person that bought it has no idea what they have. They don't realize that the annuity that they bought has high fees, high surrender charges. Most investors have little to no clue how much fees are associated with annuities. So for example, variable annuities, like you can find this on the web, the average internal expense with a variable annuity is 3 to 5%. And that's not one time, like that is per year that you're paying 3 to 5% on your money. And the best part about it is you don't even see it. The insurance company just takes it out. They just kind of slide it out of there. So you never even notice how much you're paying, other than the fact that you had the investment for 10 years and you're trying to figure out, why did I make any money on this investment? And the reason is you've been paying 3 to 5% every single year. So please, please, please avoid annuities, especially variable annuities inside your Roth IRA. All right, number 4, the last thing you should never have inside your Roth IRA, and I've already kind of mentioned this before, is cash. You don't want to have cash, or at least too much cash inside your Roth IRA. So if you're opening a Roth IRA at your local bank and the only thing that they can offer you is a savings account, money market, or CDs, then that's the only rate of return you're going to get, whatever the interest is on that savings account or that money market account or that CD. So if the savings account's only paying you 0.1%, then you're only going to make 0.1%. There's no way of making more money. And that's just because the bank doesn't offer any other types of investments. But if you go to an investment firm or if you open a Roth IRA online with any online brokerage, at least there you can invest into mutual funds and ETFs like I mentioned before. But so many people think that the Roth IRA is an investment. So when they open it at their bank and the bank only offers a savings account paying 0.1% or a 0.5% interest, they think, oh, my Roth IRA only pays this. No, it's only because the bank can offer you a limited amount of offerings. You've got to go somewhere else that allows you to put your money inside investments inside that Roth IRA. All right, so those are the 4 investments you should never place inside the Roth IRA. But at the beginning of this video, I also mentioned that there is a Roth IRA imposter that you'll want to avoid. And if you ever hear a financial advisor marketing this imposter as a super Roth IRA or a rich person Roth IRA, like that's when you want to put on your warning signs and just know that the chances are they're going to try to sell you something that's just a bunch of crap. Let me go ahead and say that right now. So basically all this is an insurance policy, and it could be a index universal life. It could even be a whole life policy. And the whole concept is that you're putting money inside this insurance product. It grows, quote, tax-free over time. At the end of it, you can take out a loan against whatever the cash balance that has accumulated. Now, this sounds all great in theory. And if you are making so much that you've already maxed out your 401k and you've maxed out your self-directed IRAs and 401ks and you can't do a Roth, then maybe, just maybe, that will be an option that you should consider. But if you are at this point where you can't even max out a Roth IRA yet because you're just starting your investment journey and this advisor is trying to sell you a super Roth IRA or a rich person Roth IRA, you've got no business putting your money into that until you've maxed out the real Roth IRA or your real 401k. And the only reason they're trying to sell it to you is because they get paid a big fat commission. Hardcore truth right there. Now, the reason that you get burned on these type of investments is because these advisors will run these illustrations and they'll show these projections of how much money you're going to have 20, 30 years from now that you can borrow against yourself tax-free. And it sounds so good. But the one thing that they always skirt around or they just kind of gloss over is the fact of how much it costs to have the insurance to have this product. They never really spend enough time looking at those costs that you never see. So now you're paying on this thing for 10, 20 years, not realizing that, man, I could have put my money somewhere else and made a lot more, and especially inside a Roth, which would have been completely tax-free. So that's what you have to be careful on. If you have an advisor that's trying to sell you one of these super Roth IRAs and you haven't maxed out your 401k yet, you don't have your own Roth IRA to start, then you just need to get away from that person. Just say, excuse me, I'm out, peace. So please, if you've not opened up a Roth IRA yet, please do. I actually have a link in the description below that shares some of the best places that you can open up a Roth IRA today. That's right, you don't have to leave your living room, you don't have to leave your couch. You can go online, open up a Roth IRA and start investing for your future. Hope you enjoyed this video. Until next time, this is Jeff Rose reminding you that it's your money, it's your life, and only you can make it awesome. Peace.